guys, welcome back to the channel after like 3 to 4 months, and it's been a long time. Did not have anything to upload, majorly because you can see how the markets have been moving sideways, but ranges have been a play, and that has been asked by people to make a video about it. So I'm going to jump straight to the point without wasting any time. And today we are going to be discussing ranges and going to be pairing ranges with order blocks, supply and demand, and SFPs. So just to start with an overview, that ranges typically do not mean that they need to be horizontal. I've seen some threads on Twitter that have been talking about how to identify ranges, and they simply jump to the point that ranges are horizontal. However, if I just take a rough example of okay, this could be a bull flag, this could be a bear flag, but let's just assume this is a bull flag. So this bull flag, as long as price action is inside this bull flag, it is inside a range. Alright, although it is forming higher highs and higher lows, it is still inside a range, and a range is not broken until it's a simple breakout or a breakdown. So if the higher high lands here, you have a retest, and this higher high flips, you could say that the range has flipped on the bull flag. And simply on the higher low, if this flips right like this, price action is coming like this, and you have something like this, you have a breakdown of the bull or bear flag, you have a confirmation to play, and you could say that the range has broken. So just so you know, the ranges do not need to be horizontal only, but this is the ones we mainly trade because we are in a sideways market. However, ranges can be anything, they can be inside any patterns or anything in general. So we have BTC in front of me right now. This is a pre-drawn range from my chart on Twitter. This is the lower time frame range. I'll explain this one as well, but first we are going to start off with the high time frame range, which I have not drawn on this. So the first thing that you need to look for is that a range is mostly formed after an impulsive move, and the impulsive move is formed by the igniting candle. So you can see that we have this entire impulsive move here. The low is formed here, so I could first begin by marking my range low. Let's just go on another chart. Okay, I have my range low here. Then as you see, you have this impulsive move right here. Right now this range low has a bounce, and it has a bounce up till here. There is an order block here, we'll get to that later, but this is where the price rejected. So you could say that this is a range high, but this is not confirmed. Let's say we are in price action range at this moment. Alright, this is not confirmed right here, but the high formed after the first low of an impulsive move is usually the range high. If you go into the future here, you could say that this is a range, but this would be more understandable to you afterwards I get into the lower time frame range. Alright, so this is the range high for the high time frame, this is the range low, and then the mid range is simply just the middle of those ranges. So this is the high, this is the low, the middle would be somewhere here. If you really wanna do it precisely, you could go on the daily chart or on the 4-hour chart, and you can see that there's rejections here. So you could place your mid-range around here first of all like this, but if you take an overlook, you could see that it's not like in the middle. So I could go to the 12-hour chart, it's perfectly fine here. I could go to the 8-hour chart, and I could start to see some more detail into it. I could see that I could mark this as the mid-range as well, I could mark this as the range mid-range as well. So let's just go on the 4-hour once again, and here we have a conclusion that yes, this seems like a range high, mid-range for this entire range, but we can further elaborate it with the help of lower time frame ranges. Alright, so this is just the high time frame range formed here. Pretty simple. You have the low formed after an impulsive move, you have the high, which is the first bearish retest, or you could say the first bounce, impulsive bounce after the low has been formed. Afterwards, if I go to my previous chart, here you have a lower time frame range. Alright, so if you remember, we were saying that the mid range was coming around about here. If you go into the lower time frame chart, now The higher time frame is done. Now let's focus on the lower time frame. On the lower time frame, what you see here is, for the higher time frame, this is the impulse, this is the igniting candle. For the lower time frame, this is the impulsive move, and this is the igniting candle, because this is one specific candle here on the 4 hour that has formed a clear low, a clear high. If you see that we have certain candles like these over here, like this could not be it, because the lows are not clear, because it has a large body. So the ones with a smaller body are more in your preference to form ranges. This one is pretty clear. All right, then there could be more. Let's say this one, this is a clear one as well, clear wicks on the sides. And if I let's elaborate it further after this one as well, if this could be a range with this just one, this H4 candle. Alright, so we have marked the high on this, marked the low on this, but we are marking it after the H4 has closed. So in the past it had looked something like this. We are not sure if this is the range high, this is the range low, but as PA moves on the 4 hour chart, you could see that the 4 hour wicks come close around the range high, but they are unable to break out. So you have a conclusion on the lower time frame that this is forming the range high for this lower time frame range. And once price breaks above this, and by break above I mean not just a simple breakout, but flip, a new high put, retest of that, confirmation play. That has been discussed in another of my video, which is called confirmation versus deviations, but that's the gist of it. And on the lower time frames. All right, now on the lower time frames, same for the range low, you do not know, because inside this entire range, price never retested this area until today. So what could you conclude from this? Now this a portion of it is called SFP, swing failure pattern. These are swing failure pattern ranges in which you have the either the high or the low. Mostly it happens on the range lows. What happens is that there is a retest of the range low, but people usually have their positions placed like this, and they get hunted down because they want to be trade the ranges. But there are some people like me who say that okay, this range was formed here like this, we do not have any previous past support inside this range on the lower time frame, so we could expect a stop hunt. Now this stop hunt is referenced as the SFP, which is the swing failure pattern. So what happens is that it SFPs on the 4 hour. You could see the 4 hour, it wicks down, it buys back up, it closes here, so you cannot long it, so you have to be on the lower time frame for this one. On the 1 hour you can see that the H1, this is the red candle, it has a deep retrace, it has swept all the stops, and it has closed back above 25.6k, which is the range low again. So this H1 candle closing right here is the confirmation that this is the SFP candle, because you have a sweep but there is not a close below, and there is a large portion of this buyback. This is represented the entire buyback. Similar for this structure over here, this is the entire buyback here. Alright, so unless price closes below this higher time frame range low, we are not bearish, we are bullish here on the lower time frames, looking for longs to the upside, filling imbalances. Alright, now if I go refine furthermore on the 15-minute, you could see the same thing as the H1 candle. You have multiple retests holding here, and basically this first retest or this second retest holding and failing to close below is further refined lower time frame confirmation that this SFP will hold and you should long it. If I talk about it personally, I was sleeping. I'm somehow managed to wake up right exact at the time when this SFP happened, and I just took a long. I went for a shower. I came back, and what price was around here. I'm still in this long. My setup, the setup. Now let's talk about in terms of setup. In terms of setup, these are pretty easy to trade because you already know the SFP has happened. All right, you already know it is holding. So why do you have to place a large stop? You can look for high RR trades. Now the best thing I do with these setups is that I either place my stop halfway through the wick, or it's like this. Basically it's a manual stop. If I'm buying, let's say over here, I'll take a manual stop here, but it could sweep lower, very low, so I have to be cautious of that and have a precautionary hard stop, but I would size it lower. So if I'm like taking a 1 hour risk, I would size it in this case to be 1/3 of the actual position and take it with a manual stop, and have a precautionary stop loss over here, so in case it hits, I initially lose the 1 hour I had planned. But if candles start to close below this range low with a pretty clear direction that it's not holding the range low and it's not a confirmed SFP yet, then I would cut the position early for a tiny loss. So for now we have covered SFPs. Next we will move on to OBs and supply and demand pairing with ranges. So for the mid range, just remember that it's the middle of the range high and the range lows. You can refine it with higher time frames moving towards lower time frame. Previously I said that we were going to look at that one specific H4 candle and see if it could be determined as a range. Okay, I was saying that this candle, alright, let's mark the high, let's mark the low on this range. Now if you go on the lower time frame, further lower time frame, alright, now this, now just looking from this perspective, yes, you can say this is a range. Alright, now you could go back to the first step, finding an impulsive move. There's an impulsive move here, there's an igniting candle formed here on the 4-hour, which we have already checked, and how we mark the highs and lows on that. Now we have just come to the lower time frame to trade it. Now this is the high on lane formed. This is the first confirmation of the range high here. Candle failing to close, breakout, whatever that is, but simply it's not doing something like this to confirm that it is breaking out. Then followed by a rejection from today over here as well. Now on the range lows it has retests, but specifically here what you could see is a deviation. Now from the high time frame we came to the conclusion that this was the swing failure pattern. We came from this entire range from over here, alright, that this is the swing failure here, SFP. Now we go inside another lower time frame range and we come to another conclusion that this is a deviation, because we have slight hold over here. Now when I was talking about confirmation, saying something like this is comes necessary over here, because if you took this candle close right below here and you shorted, you would have gotten stopped out, because there's no confirmation. There's the first confirmation that the candle has closed below, but there's not a second confirmation of a new low forming and a retest of that, confirming that the low is being lost. So we are just ignoring this entire price action here. What we are concerned about is actually this deviation here. Alright, so there's a deviation, there is an order block formed here as well. Now what could this mean? Alright, so if someone has missed longs, there's the first confirmation from the high time frame range, there's an SFP. There's a second confirmation that this is a deviation. There's a third confirmation now that there's an order block present over here. So what this could mean, if there's a retest, this could be scalp long. This is 1.2 hour setup. It's pretty good. Stop can be tightened as well, but if you wanna be more conservative, then yeah, you could, but I like this setup. So this is a 1.2 hour scalp back to the range high. Could even extend targets depending how you manually manage your position, but simply here we have a trade present. How we took the high time frame range, we are not concerned about, because it's not in our region of trade. But this range we had concluded the SFP, then we came inside another range and we found an order block. There's an order block here as well, and it would come around at the mid range, somewhere around the mid range of this structure. But just thinking about rationally that this is a further lower time frame range, would this be a good option or would this be a good option? Obviously the lower order block combined with the range low, with the deviation, with the SFP sweep, is a better choice in my opinion. Now for order blocks, how you're going to get them, I just will do a small representation of that. There is a large green candle, okay, then there is a middle red candle, let's mark red like this, and then there is a large green candle. Okay, this is the first step. You could see I have a Twitter thread on my Twitter. There's a thread about how I made 600k day trading in 2 years, and inside the thread there is a video link that explains the entire 3-bar pattern order block trading. This is called the 3-bar pattern. You have an igniting candle, you have a red in between that acts as the order block, and then you have another igniting candle. Basically until this red candle, you are not confirmed if this is the order block, but with this formation of this green, you confirm that this is an order block. And there is another confirmation, I'll get to that after this one. So after you have watched that video, you will be more clear on why is it called the 3-bar pattern, and how this is basically has been my shortcut to trading order blocks for the last whole 2 years. I do not know what any other types of order blocks are. I just know this one because this is the only one I trade with. Okay, so you've got through the order block. Now saying something like there's a green candle, there's a red candle, there's a green candle, it is an order block is not a good thing. All right, it does not make sense. So how do you confirm if an order block is an order block? Basically, uh, I told you that there is a green candle, there's a red candle, there's a green candle like this. Okay, it's looking like this. The red candle, inside the red candle, if we further zoom into this thing, you could see, let's say this is the price action of the green candle. Now this is the price action of the red candle, and then this is the price action of the green candle. If you go on the lower time frames, you could see that there is an entire pattern playing out on the order inside the order block as well, similar to what your higher time frame charts look like. But since you have never been inside that lower time frame, you have never really seen it in that perspective, that there's a range inside an order block as well that is playing out with a retest. What we are more concerned about is the red candle in between, because that is where we buy the retest. So inside the retest, you would have two options. One is that the we are talking about this red candle in between. All right, this one. You would have two options. The first option is that this is the price action of the green one. Now this is the price action of the red one. There's a consolidation. Okay, the first confirmation is there is a consolidation, and the first choice, not the confirmation, first choice, sorry. And the second choice is that there is a rounding up price action. So this is this. Instead of consolidation, it rounds up like this. All right, and that goes like this. Could be a cup and handle pattern if you want to talk about it, but there's two options. Simply inside the red bar, it's either consolidation or it's either rounding up. All right, rounding up, rounding down, depending upon whether you're long or short. Now we mark this, let's confirm it with this example. We mark this order block like this. Further, another precise detail is you could mark it like this, or you could mark it like this. If you're someone who dollar cost averages, then you should be having it like this. And if you're someone who does not DCN, goes for a single entry option, then a better choice is somewhere, find an entry somewhere over here and place a stop like around here or below the deviated lows that I previously talked about in the 1.2 hour setup. So let's just take this order block and let's go further inside a lower time frame. Okay, right, now you can see it better here. There's a run up, there is rounding up. This is a 3-minute chart. If I go on the 1-minute chart, you could further see that this is rounding up. There's slight consolidation here, but overall you could summarize this as a rounded up price action. So this confirms this is an order block. Now there was another order block over there on the 15-minute chart again, which was this one. We were concerned about whether we should take this one or this one. So let's just confirm this one as well. Go directly on the 1-minute. Same thing here. You have a run up, you have a small range here. You could say that this is a range, break out of the range, retest, or just a round up, or just consolidation. There's so many choices with that, but the shortcut is now available to you on how to find order blocks. It's just an igniting green candle, igniting red, and an igniting green one. I've shown you how you confirm it by going into the lower time frames, but over time as you practice with these, you wouldn't need to go into the lower time frame, because then it would start making sense to you naturally if it is an order block or it is not, based on the range lows, mid range, range highs, whatever that is. But do watch the video I have linked in my thread on Twitter, so that you can get to know some about some of the more detailed rules on how the order blocks are traded. Now the last thing that we are going to get into is supply and demand. Again, that is also mentioned in my thread. I'll just relink it here, that for supply and demand I use this structure. It is this one. Basically, for let's say this is the long side, you have a red candle here and you have a green large impulse candle here. So if you want to buy a retest of that, you would simply buy this entire region from here to here. Now the same rule applies on this as the order blocks. You will either have consolidation on the red candle, or you will have a roundup structure or a range simply. But the confirmation of whether it is a valid supply and demand would come from further perspectives, like if it is combining with the range lows, if it's combining with some sort of FVGs, if you use them, some sort of patterns. Now if you just roughly want to find out a supply or demand in this, now I see that there's a potential demand forming here for BTC on the 4 hour. Alright, this could be the demand. Now the problem here is that why this demand is not confirmed is that first, you obviously do not have a retest or lower time frame bounce to confirm it is. Secondly, you are at the range high, so again there is another perspective to it, that it is at resistance. Now there's multiple options on how you could confirm this demand. That is, first, this next H4 candle also closes green body like this. Second, you have a break here, possible deviation here instead of a flip, usual flip, so deviation. So in that case of the deviation, that would also confirm that there is a large body closes happening on the candles here as well, and there's a potential demand here for the retest, so that could be a long. So yeah, I could see that these two options are forming, but I do not want to jump right into a retest long over here with this just here, because again, from another perspective, it is at a range high resistance. There's a body, there's an SFP, and we talked about the lower time frame ranges and their perspective as well. So let's just if I was trading this, I would just put it on my chart like this. Usually I mark the long side screen, and I would come back to it later and see if it is a valid demand or not. If I go on the lower time frame, you could see the same thing. There's a lower time frame range happening here, there is a retest currently happening here, this is the low, this is the deviation, there's consolidation in this pattern here as well. Could also be around every up price action if there's further impulsive move here, and then a further retest could be a long. So that is simply how you found supply and demands. If I could see another example here just for reference, if we can find something on the short side. Okay, I see a lower time frame long side demand over here as well again. Okay, you see it here. Same rule, there's a red candle, there's a green candle, there's a retest as well. So the first retest could be a buy, or you could just wait for the retest. You could see it price comes around here or here. You could see that it has bounced successfully and confirmed as a demand. If I go on the lower 15-minute, it becomes more visible. Now this is a more visible pattern of the rounded up demand. All right, so you could mark it long anywhere, and further, if you go, if you want to practice, you have a demand here. Okay, you have a demand here, and anything else? Okay, that's the demands I can find. Oh, this could be a demand as well. I think this would be on the 30-minute or 30 to 45-minute here. Let's just check. Okay, so see, this came out as an order block. Order block supply demands, they are basically the same thing. There's slight differences in how you represent them, how you talk about the facts on them, but in perspective of trading, what we are more concerned about is making money. So we just want to say that they are the same thing, but we just want to be sure about the rules on how we are going to trade them. So this became said that could be a demand, but we went to 30-minute and acted as an order block. So there's multiple things that could happen inside order blocks and supply and demands. It's pretty simple, it's straightforward. I've never used anything else besides this in supply and demand series as well. I just paired these, and it becomes really simple to trade. Now, just to sum up this video, I'll take a dip into a future perspective with this higher time frame range, alright, and talk about potential scenarios. Previously we have talked about scenarios where stuff has already happened, so let's just wrap it up by talking about stuff that has not happened. So we had concluded our range low, range high, mid range could be there if you want to put it. I rarely put it, but let's talk about certain triggers for longs. Alright, on the lower time frame we discussed the M15 order block retest long. Now on the higher time frame, you could see that there is an SFP formed here right above the higher time frame range lows. Now this could act, what you could for the first option is like this. Okay, you could see something like this happening. Now if something like this happens, so this first SFP you would start have equal lows, or some people call them poor lows as well, start to form over here, and then you would start to incline towards the side that these lows would sweep. They would sweep further down here and reclaim this side, and this could be your trigger back to the mid or to the range high. That is the first thing, alright, over here. And if there is not even equal lows forming, there is the direct sweep of this level, right, like this. The market nukes. You have something like this. Okay, price comes here. Okay, let's pause. Stop in time. Price starts to like go this, 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 this. This is the confirmation for a short. Okay, because the previous low hasn't reclaimed. But if it comes here, sweeps, sweeps. Now we are going to pause in time. Goes back, goes back. There is no short confirmation. We are just sidelined, and it does something like this. It has reclaimed this low. It has swept the higher time frame range highs. It has reclaimed. All the triggers are there for the long, and that becomes a long. So this is from the downside. Now from the upside, we have this clear range high we have marked. In the future, we could potentially see if this rejects here, something like this, again, again, or first rejection, flip, confirmation. Confirmation is a long, okay? There's an order block here. This is a higher time frame order block here. When I talked about a rounding up like this, it is also rounding up like this on the short side. Okay, let's just confirm it, okay? On which time frame is that order block? Oops. Somewhere between the 2 hour and 1 hour. Yeah, somewhere between the 2 hour and the 1 hour, you have this order block. The mid candle isn't basically, you would come across some cases like this where the red candle, which is supposed to be in the middle, is not easily visible because of the default time frames of TradingView. So don't go into custom time frames, but stick to the analysis on them, that they round up the range, they consolidate, and this one is pretty clear on the higher time frame. But you could even have a lower time frame confirmation coming from this supply zone here. The rule applies here, alright. So for the long side, it was a red candle followed by a green candle like this. On flip side, you have this supply coming over here. There's a lower time frame supply, there's a higher time frame OB. This is an entire piece of resistance here. So let's just mark it here for now, and let's talk about our triggers. So we were talking about upside triggers after covering the lower time frame triggers. So we were on that, there was a confirmation play like this. So the confirmation play would actually be an entire flip of this order block here for a long further up this 28k range. But that is like unlikely to happen because this is a very large order block. It's not simply just going to fly through and flip and do. It can, but the probability is low. So we are going to just make up our mind that we are more inclined towards shorting when price comes into this resistance. Now there's two ways you could trade this short side range. First is that you could directly limit short the order block, but you would have to adjust your stops, and maybe your setup would be a low RR. But the best play around this is that price basically forms a deviation here. So what would actually happen is that price would come here, it would start to go to something like this. This is basically called distribution above resistance. Could be below, could be above, but we are talking about the order block here, so we could say that this is a distribution below the order block. People would start to look for longs here because they would see that this is a range high and it's flipping, but most of them would decline the probability of this order block acting as resistance here. And what's gonna happen is going to distribute for a while, get more longs in, and there's gonna be a flash nuke back to the range lows. It happens most of the times while playing ranges. So the two options I was talking about, the first one was the deviation. A deviation forms here, there's price action, and price basically simply reclaims back below. There's acceptance. You use words like there's acceptance back below the range high. This is the place where you trigger your short. And the second one is that it distributes, and you further, instead of looking at this range, you go inside this distribution here, and you start for the same thing. You start for looking for a range here, the same technicals that apply to the range here, and you look for a higher entry. So that could be the two ways that could play out. So when you're shorting, you could likely get stopped out. Your stop might be here, but you could see that the same thing is present over here. There's another order block over here. So the best thing in my opinion, and this is a confirmed analysis for BTC on the higher time frame, is that if there is a sweep high of 28k, then wait for acceptance back below the range high of this peak to look for shots, because it could distribute here, it could squeeze higher inside this order block and squeeze here, and there's going to be multiple trade opportunities inside those order blocks. But for the patient dudes who want to just short confirmations, that would be the acceptance back below this level. For the long side, I already covered on how this low would sweep, reclaim, and if it is not reclaimed, that would confirm that BTC is losing the range lows and we are expecting further lows on BTC. I hope ranges were clear, and just remember that ranges are not supposed to be just horizontal things, or ranges are not just supposed to be basic resistances or basic supports. There's multiple things that comes to ranges. I have given you mine in comparison to how I trade them with first SFPs, second order blocks, and third supply and demand. There could be other things that you could follow from other traders, because mainly what's used on Twitter these days is FVGs. I've never used or even looked into FVGs. My brain doesn't accept those. I just stick to what I know. So there's so be open to multiple stuff, but in the end it's just going to come down to practice. You are going to need minimum couple of 100 hours minimum practicing ranges, and up to thousands of hours on charts trading ranges to be able to successfully trade these ranges, because people who cannot trade these ranges in these conditions just say that the market is dead and it's not profitable, it's hard to trade, whatever that is. But for day traders, it's the exact same thing. Although the volatility is low and things take time, and sometimes you get stop hunted because of low liquidity, but in the end it's the same thing. If it was the 2021 bull market or it's the 2023 bear market, those who know how to trade will trade it despite the conditions, because in the end it's the RR of your setup, how much you're risking and how much you are making, whether you're scalping or whether you're swing trading. So you will need to practice a lot, a lot. It's not going to directly start working at the beginning. It might work, but over time it would start to fail. But because it's a guaranteed thing, it's gonna take a lot of practice, because most of our ranges is basically just a high level, a low level, and the next is just experience on knowing when to trade the range, knowing when to long the range lows, despite the confirmations present, despite the market conditions. That just comes down to experience and how much your brain has a memory of how many ranges you have traded, and how much of a certain thing, via whether it's SFPs or blocks, supply and demands, has been successful for you based on your own confirmations. Alright, so ranges are pretty simple. If you can invest time into this, because this can make you a lot of money. I have traded from the start of the bear market to the end of the bear market. My entire net worth comprises of trading ranges, so it's pretty simple. Money can be made anywhere. Don't fall for people who say you can't, market is shit, blah blah. Just work hard and you'll get through the ranges thing as well. And the next time I'll see you would probably be after October, when I have done my traveling, and we'll get back to volume profiles and streams and usual weekly market update videos after October. Alright, see you on the next one. Bye bye.